U2 Holdings is a relatively new company on the stock market with a market value of around 6 billion. That could be quite promising in the coming year. But this is a risky stock with a lot of volatility that experienced investors can benefit from, but beginner investors will likely have a lot of trouble with it. QT Holdings is a digital banking solution, and this is not the first finance stock in this edition for 2025. The interest rate is still relatively on the higher side. Higher side, not super high, but definitely on the higher side. And certain financial companies can just benefit from that. You also see on FI, for example, whether it's Landing Club or similar holdings, all relatively smaller, risky stocks that could potentially outperform, but they do carry a lot of risk. QT Holdings, the fair value assumption from Morningstar, is definitely much lower than the current price, gives it 2 stars. Are we looking at analyst ratings? They really think that the price is a bit higher than the current one, but that means one, a potential return of just 3%. And I also think that Q10 Holdings has risen a bit too much based on recent results because they are doing very well and they will probably continue to do very well. Well, look, just that the price to earnings ratio is relatively on the higher side. It has risen very quickly in a short time. If you just look objectively at least 2025, 2026, and analysts are giving a high profit expectation of about 30 and 23%, well, that's definitely on the high side. Now, let's say the price to earnings ratio is, for example, 27. Then there is still a potential loss of minus 16%. So the price to earnings ratio really needs to stay very high. Will there be positive returns? So actually, the price to earnings ratio needs to be around 40, and then you'll only have 2% returns. However, this is only based on the situation that this profit growth is being achieved. If that profit growth is lower than expected, will the share price drop? But if that profit growth is higher than expected, will the price still be able to rise significantly, at least in the short term? So that's really exciting. Well, and yes, you might wonder, why should I invest in the stock? If you look at, for example, the valuation, you can see that it all seems very expensive. Also, the EV to sales and the price to sales ratios are all really on the high side, certainly compared to the sector median. So this is anything but undervalued stock. This is really a good stock with possibly too high a price tag, but time will tell because you can only outperform beating the market if you do things that are different from expectations. Otherwise, you can never achieve high overall returns. I just think personally, I wouldn't go for QT Holdings. I don't have it in my portfolio either. So I'm not getting into it. It's too risky for me. But it could be that you have more expertise in this industry and then also in this company, QT Holdings. Yeah, then it could be that this is a winner. Well, the factor analysis, the quantitative analysis indicates that it's a strong buy, and that's mainly based on the strong growth. The stock is expected to achieve more profit growth next year. Look, the EBITDA growth is estimated at around 60%, and actually the EPS growth is even at 100%, so that's pretty bizarre. We also see here that the estimate is only 30%. In this database model, it's higher. So the question is, who is actually right? Actually, a quantitative analysis should be carried out here, and preferably by people who really have a stake in it. To be honest, my expertise isn't in finance, so this is a no-go for me. But for you, it might be interesting enough to look into research, and that's why we also publish this as an idea, for your awareness to look into further. The profitability seems poor, but that's really just because the company is in a growth phase. And indeed, there can be a very strong growth in the short term, and if it rises faster than expected, then the price will also increase further. SEX indicates this as well. And if it rises faster than expected, then the price will also increase further. SEX indicates to hold. The value gets an F, which makes sense. We can see that here. The valuation doesn't look good in the short term, at least. The demand drives everything in the long term. A very small piece, if you believe in this bit of technical analysis, then we see here that the MACD is starting to cross. That's not positive. The suggestion is also starting to decline. The price is starting to approach 1.20. To approach it, if you break through it, it might go down harder. And the valuation also seems high in the short term, probably a bit too high. The question is, of course, what the long-term growth potential is. So it could be really interesting to see what happens if the stock drops a bit further. So let's just assume for fun that it drops to this level, roughly. Here could be a possible support level for the more short-term traders. Whoever dares to take that on, don't spend it on me. But this could still imply a price drop of about 25%. That's not exaggerated for a kind of good stock in this situation with the high valuation. So that could be a really nice price drop of about halfway. Then the valuation might seem more attractive again for 2025 or for the long term.